Guys, it's Carter. Welcome back to the channel. I hope you guys are all having a great and amazing day today. Now in today's video, we are going to be talking about when you should sell your shares when swing trading. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. If you guys are new to the channel, my name is Carter and I've been a full-time swing trader for about 6 years. And with that being said, I just actually released a fantastic new course. And I know when people think of YouTube courses, they cringe, but I'm telling you, this is your one-stop shop for all of your swing trading needs. We talk about how to find stocks, my strategies, my mindsets, all that stuff. So guys, I hope you guys all enjoy it. Let's dive into this. I hope you guys enjoy it. Let's go. All right, so when you're swing trading, there's pretty much going to be 2 times when you sell your shares. The first time you sell it is when you get stopped out on a stop loss. The second time you sell it is when it hits your profit and you actually sell your shares. So let's break down some recent swing trades on where I took profits and on some where I have a stop loss already set. So let's dive into the first one here. The first one here is on ticker symbol SUZ. This is a more recent swing trade that I did. And obviously, looking at the chart, you guys will see that every single time it hits this blue line, which is the 90 moving average line, we just get tendencies of getting a lot of buying pressure. So recently, I hopped in near and around this price at about 1028. I hopped in there. Obviously, the reason why, hit that support and we did get some buying pressure, which worked out absolutely fantastic. Let's remove this right there. All right, and let's set that there. So looking at it here, as we hopped in at 1028, what was my mindset? What was my plan? So I set my stop loss near and around this pretty much $10.90 mark, near and around this price. And the reason why is because risk management. By far, one of the more important things when swing trading is risk management. You could have the best strategies, the best mindset, you don't trade with emotion, but if you don't understand basic risk management over the course of the long run, you will, lose money here. So looking at it, you guys will see that what I actually did here is I set my stop loss near and around this 990 mark. Now, yes, I could have set it below this 200 moving average line, which does act as a harder support, but recently, I've been growing a small account from $100. Right now, I'm sitting near and around $600. But the reason why I didn't set it below is because I wanted a tighter stop loss. So if this thing started selling off, I'd rather just cut my losses early and not worry about it. So that's where my first sell was near and around this price right here, my stop loss. Now, where was my profit? So looking at it, you guys will see it has resistance here and it does have resistance here. So what I did actually on this one was do something called a trailing stop. A trailing stop loss is a way where you can set a stop loss and continue to hold as the price goes up. So imagine this blue dotted line is your stop loss, okay? What you do is as the share price continues to go up, you adjust your stop loss. So as it comes up here, what we do is we bring the stop loss to about 1050. Now, one thing you need to understand when you're swing trading or trading in general, you'll start understanding that like whole dollars and half dollars do act as very, very hard support and resistance as well. So what that means is like 1050, that half dollar is going to be a harder support than like 1035 or 1048. So what I did is I set it near and around this 1050 mark. Now, as we got more buying pressure here, you guys will see that I adjust my stop loss. I'm continuing to bring this up. Now, the reason why is because if that just say this stock continues to rally, and you guys will see that it broke out of these resistance and it's actually breaking out of this one. And the great thing about it is you're just adjusting, your stop loss with that. Now, yes, I did sell some shares at about 1026, right at that old resistance line. You guys can see it hit it a couple times in the past. I personally thought we were going to hit that line and get a lot of selling pressure and hit it here and drop it down. So that's why I did sell some of my shares just so I can maximize my profits. But I'm still continuing to hold with this trailing stop. So I'm very, very excited to see where this stock goes. But this is just a clear example of how you should adjust your stop loss and where you should sell. Another stock here recently that we swing traded was ticker symbol NVO. Very similar situation here. As we look at it, we get tendencies of getting a lot of support on that 90 moving average line as well, it does have some pretty hard support as we look at it near and around these prices right here at about 95, 91. So you guys will see it hits it once, we got buying pressure, hits it twice, we got buying pressure, hits it here, plus that 90 moving average line, which is another indication where we now have two indicators possibly giving us a pretty hard support, right? We have the price as well as the moving average line. Okay, so obviously what I did here is set my stop loss pretty much just below this 90 moving average line, near and around pretty much $93. So pretty much risking hopping in at about 90, pretty much it was almost 96 here, pretty much risking about $3 to possibly make upwards of $6-7 a share, which is a 2-to-1, 3-to-1 risk and reward, which is pretty solid. Now you guys will see that it soon curled up, and this is no problem. When we have these dips down, you're gonna have days where you get a little sell-off, which is fine. That's completely fine and manageable. And then obviously we soon rebounded, and then what I did is I just sold that resistance. I did not do a trailing stop on this one. I easily could have, and there would have been no problem doing it. And it all comes down to judgment. I personally felt that we were gonna hit this and do what it kind of did here, where it hit it, and we just got immediately selling pressure. And you guys will see it did squeeze up in the past, but it overall did get a lot of selling pressure, and I did not want to miss out on profits. One thing you need to realize when you're swing trading is if you're up on your money, it's completely fine to just take profits and sit on the sidelines. There has been countless days where I'm up 3%, 2%, and I go, okay, I'm up 2 or 3% in a single day. Let's just take my profits and sit on the sidelines. Even if you're not at resistance, even if you're just maybe at 99 or $100, maybe you're up a couple bucks, 50, 60, $80 on a small account, and you go, all right, well, I'm already up, I'm a little unsure, let's just take my profits and sit on the sidelines. And what I would do is move actually to your paper trading account and paper trade with it. See what's going on, practice those different strategies and those mindsets there. So this is another clear example of how you can adjust your stop loss, whether it's a trailing stop, so you just keep moving it up as the stock goes up, or what you do is you just set a hard stop loss and a hard profit. And that's exactly what I've done. And it would have been completely fine if it hit like $99 and I decided to go, hey, I'm going to sell half my shares and see what happens. I made a little money. Now let's see if we can get that squeeze up to resistance. That's completely fine. Let's actually go ahead and we can pull up one more here. This one here is another one here that I'm actually in right now. This is on ticker symbol XPEV. You guys will see we had tendencies in the past of getting support near and around this 13.35. So I did hop in probably a little earlier than I should have. But overall, I do think we'll probably get a little more sell-off, probably down to, 1380. But right now I do have my stop loss pretty much set at about just below $13. So I'm risking about 66 cents as of today to possibly make, if we get, rebound up to 15 or even, 16, 17, $18, we'll just go here. I'm risking about 66 cents to possibly make $2, which is a 2-to-1 risk and reward. Or if it goes up here, this is upwards of 3-to-1, 4-to-1 risk and reward. So you guys can clearly do those. Basic risk management here, and all I did on this one is just set a very, very hard stop loss with this, and near and around below the $13 mark, just because whole dollars, so like $13 even, is going to be a harder support than 1305 or something along those lines. So that's why I set it just a little bit below it. So if we do get some buying pressure, that will be absolutely fantastic. But overall, we had a little red day in the market, so there could be a lot of opportunity coming in the next couple of days, and I'm very, very excited to see what happens with this, guys. So I hope you guys all enjoyed it. If you have any questions, let me know, and we'll see you guys later. So guys, that is it. I hope you guys all enjoyed this video. If you guys did, hit that like button and subscribe. Don't forget to check out my swing trading course, and we'll see you guys in there. Take care.